sure that I can jump between a couple different screens here as we look at financial status reports and cost categories. Okay, the first thing I want to go over is just a real quick review of creating financial status reports. And this should be what you all see when you log into CWDS. And let's see if I can do what I did before. I'm going to choose Berks as the example here. You'll go in, you'll select finance, of course, and you identify your contracts. And within the contract, when you want to create an FSR, you select the 3 ellipses over here and create an FSR. The FSR requires you to select the reporting month and the reporting year. You can either download a template that has all of the appropriate cost categories, enter your information into that template, and then upload that expenditure files, or you can continue without uploading and enter the information directly into the report. The default is to show all of the available expenditure categories. You can collapse it here for easier reference. And of course, just enter in the correct information. And when you're done, you hit submit. Couple things to note. First of all, it's very important. Sorry. The bottom of the FSR has several areas for you to also enter information. And I'm going to switch over to my other screen to show that. Okay, so at the bottom of the FSR, there is a section for administrative and program obligations. So these are obligations that you have for payments to be made that have not yet been made. So they're not reported as an expenditure on your FSR or as an accrued expenditure. It's critically important that in the June FSRs that you have these amounts filled in because we use this information to determine whether or not you've met the 80% obligation requirement for your local WIOA funds during the first program year. So the requirement is that within the first year, you have either spent or obligated 80% of those funds by the end of June. So what we will be doing in the next month is to look back at the June 2025 FSRs to make sure that 80% of your PY24 local funds have been expended or obligated. So very, very critical that you fill out that information on, especially on the June FSR. Good practice to have it on all of your FSRs, but particularly in June. You do have some optional areas that you can add in stand-in amount or which are costs paid from non-federal sources that are proposed to be substituted for any federal costs that would be disallowed as a result of an audit or other review. Typically, there's not information included in either of these boxes, but it's there for you if they're relevant to you. You also then have incumbent worker training, employer contributions. So when you report your expenditures, if you report any IWT expenditures, you also have to have an amount here as an IWT employer contribution. The system will not let you proceed if there's no information put in there. And then the final section is program income. And just remember, what you're reporting here is any program income earned during the current period, and then any program income expended during the current period. And the guidelines are that program income must be spent before new funds are drawn. So it's very, very important that you spend that program income before requesting additional funds, or that you use that as an adjustment for the funds that you're requesting. Okay, any program income becomes an addition to your budgeted resources from WIOA. Okay, and then the FMG has a reporting matrix for when FSRs are required. This is the reporting matrix for WIOA funds. So you're required to submit an FSR in July, April, May, and June. Those are monthly FSRs. August and September can be reported together. Q2, which is October through December, and Q3, January through March, can be reported as quarterly FSRs. Again, if you want to report monthly FSRs, you're fine to do that, but the requirement is at least quarterly for Q2 and Q3, and more frequently for Q1 and Q4. Reminder that timely reporting is very critical per this schedule, particularly at the end of each quarter. We have 45 days after the end of a quarter to consolidate all of the information from the FSRs and report on our quarterly financial report to USDOL. So your timely response to submitting these FSRs helps us get that done in a timely basis. And generally, we have no issues with you doing that. So we greatly appreciate your responsiveness to that. Okay. The next section I want to jump into is cost categories. But before I do that, I'm going to jump back over to my other screen and talk just a minute about draw requests, because they're related to both FSRs and cost categories. So on draw requests, and I'm going to come back in here to searching for contracts. Okay, so if we were going to create that's obviously a no draw. That's actually, this is a good clue. If you try to draw funds and you say, it's not letting me do it. Like I click my 3 ellipses and there's nothing here that says create RFF. What's going on? And the clue here is that this contract is set to a not allowed draws. And the specific reason for this one is these are the 25 DW first funds, and these are still on budget period 25. So we have set those to not allow a draw, because if you try to draw those funds, it wouldn't get paid out right now, and then it just makes a mess with needing to go back in and cancel that. So unless you've asked us to move your first increment funds to budget period 24, you'll see that these are set to no draw. Okay, if you need those funds, please email the fiscal resources account, fiscal ops resource account. Generally, it's been taking us about 2 or 3 days to be able to get those funds moved to you, and then we would set this to allow a draw, and you could have access to those funds. Okay, but as long as this is set to the allowed draw is yes, you can create an RFF. Yeah, my system is thinking. Okay, first thing you have to do is, of course, click the cash on hand concurrence, which just means that your certifying that this draw will not lead to a cash on hand situation, that you need these funds to pay expenditures that you have. Again, you can use a template to enter your information, or you can continue without uploading. And you're going to do just as was done with the FSR. You're going to enter in here the amounts that you need to draw for each of these categories. What's important for us here is for you to use the detailed categories. In other words, don't just, this is actually a youth contract, so it has fewer cost categories. But if we go back, and this is going to make me go back all the way to the contracts. Big C, for example, under, whoops, that's no draw. Okay, this one should allow me to do that. Okay, what we need you to do is to provide numbers for each of the area cost categories that you expect to be making expenditures for. These don't have to be exactly the same numbers as you would report in your FSRs, which are actual expenses, but they should be close. Periodically, we see that people put everything in just other program expenses rather than breaking it out. And then when either we or USDOL select draws for random sampling, the expenditures do not match what the categories were for the draws, and it just makes things more complicated. So if you would, please estimate what you need those funds for and put the appropriate numbers in those cost categories. Okay. Oh, and then just one other thing on that. When you do, okay, this is not good. Sorry, get back to where we were before. If once you've entered your information, you can either save as pending. If you save as pending, that keeps it in your system, and you can either have someone else review it before it's submitted, or you can go back in and make changes if you need to before you submit it. But that will not send it to CWDS for processing. In order for that to happen, you need to submit it for payment. So if you save it as pending, you go in and edit it, and then when everything is clean, hit submit for payment. The other thing that you can always see in here is the status of your requests. So once you submit a request for payment, it should, within a couple minutes, it should show as SAP posted successfully, as long as there are no issues. If it doesn't show as SAP posted successfully, then you need to look into what might be happening there. And you can always go in here to view the SAP details, and it will tell you the information that you need to know. So in this particular case, it was sent to Treasury on 10/15. Current status is, well, we know the current status is posted successfully because that's what shows on our screen. There's no paid date, so it's in the system. If it's paid and you look at the SAP details, it will tell you when you sent it to Treasury and when it was paid, as well as the account that it was sent to. Also lists on here what your bonding limit is, and just as a reminder that all of you have a bonding limit, and you cannot make any draws that exceed that amount. So if you've got a request that's going to, in this case, exceed $300,000, you need to split it into 2 or more requests. Otherwise, the system will reject it. So that's a way to tell what's happening with your requests. So again, I'm assuming that FSRs, RFFs are a very basic review for most of you. Hopefully the system works very smoothly for you on that. Now, we're going to switch gears and move into cost categories. And so both the FSRs and the RFFs, as we've seen, use cost categories. And those cost categories are very, very important for us to be able to report expenditures to USDOL by type, as well as for us and you to gain more insights, more specific insights into how the money that you receive is being spent. CWDS now limits the cost categories by contract type. So for your youth contracts, you're only going to see categories for administration, in-school youth, and out-of-school youth. For your other contracts, primarily your adult and dislocated worker, you're going to see administration, career and supportive services, training services, and other. So hopefully that's a way of keeping things more consistent so that you don't make mistakes and use the wrong categories by mistake. So first want to look at WIOA administrative costs. And so those of you that were in Brenda's allowable cost training yesterday got a good dose of this as well. So this will be a refresher for much of that. For those of you that still have that training to attend, this will give you a bit of a preview into some of the things that will be covered there. So for administrative costs, WIOA is very specific in terms of what those expenses are. And so it includes personnel costs for a listed set of activities that are basic accounting, budgeting, financial, and cash management functions. And we'll also make sure that we not only send out this presentation to you all so that you have it, but Brenda and I will be working to make sure that we've got an updated version of the cost categories, what they include, and the kinds of documentation that are appropriate for each of those categories. So we will be getting that to you in the near future as well. So you don't have to remember all of this, and you don't have to take detailed notes. We'll try to make sure you have all of this in writing. So administration is personnel costs for accounting, budgeting, financial, and cash management functions, and performing oversight and monitoring responsibilities related to these functions. And administrative operational costs are the costs of goods and services that are required for the administrative functions of the program. Travel costs for official business and carrying out those activities, and costs of information systems related to those administrative functions. So the nice thing about that is if it's not admin cost, if it doesn't meet those definitions, then it's program cost. And so those will be the way you differentiate between those two. The distinction is important because, as you know, you're limited to 10% of your award for administrative costs. So if things are legitimately program costs, you don't want to be counting them as administrative costs. The other thing to remember is that you can use administrative funds for program expenses. So if you don't have administrative costs that total 10% of your awards, that's not a problem. You can use that difference as for program expenditures. You cannot, however, go the other direction. So you cannot use program money for administrative expenditures. And so it does give you some flexibility there, though, in terms of additional funds that you could use for program expenditures. Okay. Within administrative, there are three breakouts for the administrative subcategories. And actually, I didn't on this slide for some reason put the numbers in here. Actually, that's probably going to come later on. But A1 is our staff salaries and fringe benefits. A2 is the operational expenses, and A3 is the indirect costs. So these first two are pretty straightforward. We can identify what salaries and fringe benefits are, what operational expenses are. Indirect costs get a little bit trickier. The cost principles define indirect costs as those costs that are, number one, incurred for a common or joint purpose. They benefit more than one cost objective, and they're not readily assignable without disproportionate effort. In other words, it would take way too much time, cost, energy to determine how each particular program benefited from these costs, and that cost has been determined not to be worth it. So you can recapture these indirect costs by using an indirect cost rate, and either that's a rate that's been negotiated with your cognizant agency, or you can use the de minimis rate, which for grants awarded after October 1st, 2024 is now 15%. Prior to that date, it's 10%. So indirect costs you accumulate in an indirect cost pool, and then use your indirect cost rate to assign those out across your various grants. And your allocation base must make sure that you have equitable distribution to all of the programs, so that it meets the benefits received test. And you can define what the base is that you're going to use, as long as you can justify it and you use it consistently. You're fine. Typically, or the most common bases are total direct personnel costs. So you take your salaries and wages and fringe benefits, and then that are chargeable to each, that are directly chargeable to each grant, and use that proportion to allocate out your indirect costs. Or you can also use a modified total direct cost basis to assign those indirect costs. Okay. The next major area of cost categories is our career and supportive services. So the first one, B1, is staff salaries and fringe benefits. So similarly to what we had with under administrative, we've got now staff salaries and fringe benefits under career and supportive services. And this is personnel costs for individuals directly engaged in activities that were not listed in A1 as administrative activities. One important thing to note is that this should include local board and Title I staff salaries and fringe benefits. So yesterday's allowable cost training, Brenda stated that Title I salaries should go under other program expenses. Upon further discussion, we're correcting that, and that should go on those Title I staff salaries. Oops. Okay. Didn't like me clicking. Those Title I staff salaries need to go under staff salaries and fringe benefits, the same place where the local board salaries and fringe benefits are going. Similarly, for operational expenses, this is going to include your local board and your Title I operational expenses. Okay, these are non-personnel, non-administrative costs incurred for the direct purpose of meeting your grant's objectives. And you can see several examples here: cell phones, rent, utilities, supplies, travel, etc. Okay, then we have B3, other program expenses. And costs that you include in this category should not fit into any other line item category. So in other words, if you've got an expenditure that reasonably can fit in one of the other cost categories, put it there. Don't put it in other program expenses. Please don't use this just as a catch-all category. Examples here, whoop, yeah, remember not to click. Examples here include wages paid to participants for participating in an internship or receiving work experience. Okay. Again, this typically is going to be, there should not be a lot of expenditures in that particular cost category. B4 is needs-related payments, and these are payments that provide financial assistance to participants to enable them to participate in training. The participants must be enrolled in training, and there are a number of other specific requirements in the uniform guidance as far as eligibility for needs-related payments, but it's a type of supportive services. Again, many of boards do not use this particular category, but if you do, please make sure that it meets all of the requirements laid out in uniform guidance. B5 is your supportive services, and these are services that are necessary to enable an individual to participate in authorized activities. Examples can include transportation, childcare, dependent care, housing. As Brenda emphasized yesterday in our allowable cost training, it's important to document both the need for these supportive services as well as the fact that they cannot be met from other sources. So both elements of that are important to have in your supporting documentation. The sixth category is program indirect costs, very similar to the admin costs. So these are indirect costs, indirect program costs. It can't be directly attributed to a program. Excuse me. We also have two categories for temp jobs, both for participant wages, B7, and participant fringe benefits, B8. These are allowable only under national dislocated worker grants. So again, it's not something that's used very frequently. Then moving into the next major section, training services categories. We start with C1, which is tuition payments or individual training accounts. These are training services that are typically provided by training providers, and they receive payment through the ITA. It's a payment agreement established on behalf of a participant with a training provider. C2 is on-the-job training reimbursements, and this is training by an employer that is provided to a paid participant while engaged in a job that provides knowledge or skills essential to the full and adequate performance of the jobs, reimburses the employer for extraordinary costs of providing this training and additional supervision that may be required. It's also important to remember that these are limited in duration. So this enables you to provide support to employers to hire individuals who may not be fully qualified to carry out the job when they're hired. So they need additional training or support to get to that expected level. C3, skill upgrade and training. This is expenses related to upgrading skills for workers who are in the same work category, but whose skills need updated. One of the examples that Brenda often uses is an accountant who may have done accounting work for 20 years, but needs additional skill training in computerized accounting systems or the more modern computerized systems. So there's continuing work as an accountant, but they need upgraded skills for that. C4 is adult education and literacy training. use Title I funds to provide these activities if they're provided concurrently or in combination with other specified training services. And rather than listing out the whole set of activities that meet that requirement, when we send out the full list of documents, we'll have, or the full list of these items, we'll specify those so that you can verify whether or not that's meets those requirements. C5 is other training expenses. Again, we prefer you to use this very rarely. That if it fits any of the other training service categories, please put it in one of those categories. And then other training. Here, this is specifically a training that does not fit in any of the other categories that we have, the C1, 2, 3, 4 categories. Okay. Again, the preference is if it fits in one of the specific categories, please use that. C8 is apprenticeship training. This is only going to be used when you have approved registered apprenticeship training costs. And so it's specifically related to those apprenticeship programs. C9 is incumbent worker training. And these are costs that assist workers in obtaining the skills necessary to retain employment or to avert layoffs. So you're working with existing employees. On the job training, you're working with new employees. Incumbent worker training, these are existing employees, but they need additional skills to retain that employment. This training must increase both the participants and the company's competitiveness, and it has to include a employer contribution as determined by the size of the employer. So with small employers, they are required to contribute a smaller portion of this amount, but every employer that receives this kind of assistance to provide this training has to make some contribution. And as we noted on the FSRs, you have to include that in your FSRs as the employer contribution. So if you're reporting expenses here, you've also got to have their contribution reported. C10 is customized training, and that's training that is designed to meet the special requirements of a particular employer. There's a commitment by the employer to employ individuals upon successful completion, and the employer pays the cost of the training, and then is reimbursed for that. Okay, and then we also have a transitional jobs expenditures. That is a separate category, and this is listed under I-1. These are time-limited subsidized work experiences for people with barriers to employment. Has to be combined with comprehensive employment and supportive services, and they require a 100% wage subsidy. So, and these are expenditures that are used by local boards for these types of transitional jobs. Okay, youth training. Youth, the expenditures are split into in-school and out-of-school youth, and there are corresponding categories for each, for both in-school and out-of-school youth. We do have to report separately to USDOL on the expenditures for in-school youth and out-of-school youth, and then there's a requirement that 80% of your youth funds are spent on out-of-school youth. And then we also report to USDOL on work experience. So that's why it's important that categories, that you use the proper categories when you report these expenditures. F1 and F5 are work experience, the participant costs. F1, I believe, is the in-school youth, and F5, the out-of-school youth. F2 and F6 are the work experience, the staff costs for providing work experience. F3 and F7 are other training expenses. F4 and F8 are other staff and operational expenses. F9 and F10 are incentive payments, and incentives are recognition and achievement directly tied to training activities and work experiences, which can include gift cards, bus passes, gas cards. Again, there's got to be a policy for what those are, how people earn them, how they are distributed. And then finally, there's also F13 and F14, which are indirect costs. Okay, so again, that's reported separately for both for in-school and out-of-school youth. Okay, so that's the content. We're gonna run through several quiz questions just to test how well I covered these topics, and I'm going to thank Brenda for these quiz questions, questions that I've drawn on from previous years when she has done this particular presentation. So, first question is eligibility that is done on an employer and training is provided to an employee. Where I'm going to try to move my screens to a place where I can see it. So either put in the chat or you can come off mute and suggest an answer. What category would this expenditure go to? You're doing eligibility on the employer, providing training to the employee.
Incumbent worker training.
Okay. Very good. Incumbent worker training is what that's going to do. So it's the employer that is you're looking at their eligibility as an employer for this kind of training to be provided, but you're providing training directly to the employees to be able to retain employment or improve that business's competitiveness. So very good. Thank you. Okay, training by an employer provided to a paid participant engaged in productive work in a job that provides knowledge or skills essential to the full and adequate performance of the job. This one's a mouthful. Okay, and I'm seeing at least one OJT in the chat, and this is on the job training. So again, you're developing that that person who's been hired to carry out a job for which they're not immediately fully qualified for, but you're helping them develop the skills to be qualified for that. Okay. Wages of a temporary employment opportunity funded for a National Dislocated Worker Grant participant under an NDWG grant. I realize even though I told you didn't have to take detailed notes, you have to sort of be able to remember what these categories are. So, yeah, these are, yes, okay. So these are going to be here, temporary job participant wages. If you remember, we had a CAS category that is, get to my right place. B7, which is the participant wages, the temporary jobs for it. So it's slightly different than the transitional jobs. Okay, because transitional jobs do not have to be limited to NDWGs. Okay. But there are some definite similarities between those. Okay. Salary and fringe benefits of Title I staff. Okay. Seeing program salaries and fringe, B1, which is our program staff salaries and fringe. Yes. So, um, as we discussed earlier in a correction to yesterday's um, allowable cost training, these should be in program staff salaries and fringe benefits, the same place that your local board's salaries and fringe benefits go. Okay. Title I adult or DW internship or paid work experience. B3. Yep, B3. And also other program expenses. So these are specifically called out as in the other program expenses category. So that's one time when this category that I asked you not to use as a catch-all category, but this is where you would put these kind of expenditures is in this other program expenses. Okay, youth work experience. Okay. So it would be OS, well, either, yeah, it depends. Again, whether it's in-school youth or out-of-school youth, but work experience participant costs is where you would put that, or participant wages. Okay. 7, your human resources managers hiring a new monitor at the LWDB level. Where are their time charges for payroll and fringe? So this is the human resource managers payroll and fringe benefits. Okay. A1, admin, staff salaries, and fringe benefits. Yes, correct. Title I career advisors conducting eligibility on a dislocated worker. Okay. Yeah, B1, program staff salaries and fringe benefits. Yes. Very good. LWDB staff are processing invoices for a grant program. Okay. So here we're talking about the staff costs. So this would be admin, staff salaries, and fringe benefits because it meets one of those definitions of administrative activities from the WIOA legislation. Okay. And what these uh, last three questions exhibit is the fact that different people, well, sorry, the same person doing different tasks can fall either in administrative or program staff. So you have to make that determination on the basis of what exactly they are doing. 10, where's the bill for for the auditor who's doing a single audit charged? Yeah, and I need to correct this slide because it says admin staff salaries and fringe benefits. That is not correct. It should be admin operational costs, as you all have explained here. So this is read this as admin operational. I will change it in my slide deck. As Christine listed indirect cost, it could also be in indirect cost. If you had too many programs and it was too hard to determine specifically how each program benefited, you could justify putting it in indirect cost. The key there is just to make sure that you're treating it consistently so that if it's in indirect costs, it's in indirect costs for all programs. If it's charged under those operational expenses, it's done the same way for all programs. But that would be a determination that you would make there. As long as you're consistent, you're good. Okay, Title I, providers purchasing a new desk for their youth career advisor. Okay, yes, admin operational. And I got carried away with my cut and paste yesterday, so I apologize for that because this again says salaries and fringe benefits. It's not. It's operational expenses. And then finally, you receive a bill for a Title I eligible adult who's attending a mechatronics training. Where are these costs charged? Okay. ITAs. This I have as other training, but it can also be ITAs, and ITAs are probably the better category. So again, I will update that response. So it depends on exactly how you set up that training for that individual. So very good. Thank you all for paying attention. Thank you for your responses. And with that, I'm going to end the slideshow. And I'm going to stop sharing. I hit find my right button.